Welcome back, and joining us for a look at the day's market moves is Simbongile Nyangintsimbi. Thank you so much for your time, Simbongile. I am actually quite surprised at the positivity that we're seeing in the markets today, particularly the fact that investors are following Fed Chair Jerome Powell like a hawk. Actually, I don't know if I intended that pun, but I don't know. So he's testifying today and tomorrow, still seeming like he's hawkish, but the markets are up. Are they just shrugging all of this off?
So I think on that front, there shouldn't be anything much new from Powell's statement or testimony. A lot of what he said should still be coming through in terms of when they're expecting rate cuts. And also, we've had a look at the Fed Watch tool, which is showing that sentiment is now converging more towards what the Fed has been saying about the first rate cuts only coming in the second half of the year, so the June meeting.
We are so far from when markets thought that the first cut would be coming in March. So it's really been quite interesting. So maybe I'm guessing, the markets have just accepted that, the first cut is coming in June. So let's just get on with the business of trading. Let's go into the company news that came out of the JSE. Marian Roberts out with its interim results. Of course, that's one that markets have been interested in because of just the headwinds that they encountered, particularly in Australia, but also the strategy revamp there. So their financial metrics seem better. We did have an uptick there in revenue, and also the loss on the bottom line narrowed. We did see that stock surging 7%. Just looking at these financials, does it look like they're finally bearing the fruits of being a lean machine?
So, as you said, their headline loss per se has narrowed to 13%. So the fact that it's a loss is not ideal, but the fact that it's improving, I think markets are happy with that improvement, especially given their Australian business challenges. I think they are finding comfort in the outlook going forward. So Marian Roberts is well placed to take advantage of infrastructure development growth across Africa, especially in the energy infrastructure space with their OptiPower business. And then they announced that they really have reduced their net debt from about 2 billion Rand right down to 247 million.
Wow.
So this should definitely reduce their interest charges. And then also, their mining brands in Africa and America are generally highly regarded. So with this side of business growing revenue and maintaining operating profit, I think over the next 5 years with the global mining sector, it's expected to see growth because of the increased investment in minerals and metals that are essential for the energy transition. This will really help the company, and I guess markets are hanging on to that.
All right. Well, let's get to Quilter. They released their year-end results saying that their assets under management and administration increased by 7%. Even there, it actually looked like, because just looking at these types of companies that also rely on the markets, it seems that it was a better than expected performance there.
Yes, so as you say, the results were quite good. They showcased the substantial increase in profits and dividends, which was driven by their strategic focus on efficiency and growth. Their growth in assets under management and administration was supported by favorable market conditions and net inflows. And what we've seen is that as part of their simplification program, they put new systems in place that will make their platform more efficient and also more attractive to wealth managers to use, which has contributed a 5% improvement in their operating margin. And so we'll see that when markets go up, they'll also earn a bigger commission on the assets they manage. And it seems that markets even took that cautionary warning that they put out in their stride because the share price was up today.
All right. Well, let's get to some fishy business there, Sea Harvest. Year-end results. their revenue was up 6%, but that didn't filter through to the bottom line. We did have a basic HEPS down of 5%. There seemed to be a mixture of factors in this performance on the downside and on the upside. What stood out for you?
Okay, so their HEPS falling by 5%. This was mainly because of higher interest rates. These interest rates rose by 47% over the reporting period. So it was quite a challenging year for them. We also saw their sales volumes dropping 7%, but this wasn't so much because of demand, but rather because they experienced robust growth in the demand across markets, but it was rather because they had lower catch rates. So the movements between the El Nino and the La Nina weather patterns created some instability in terms of their fishing. And then another challenge that they had was in terms of prawn prices. So the global oversupply of prawns led to a 25% drop in those prices. But the great thing is that they did still manage to remain profitable.
All right. Well, let's get to your stock pick for today. Simbongile, what are you hanging your hat on today?
So today I'm going to go with Afrocentric. This is more of a long-term pick, I must warn you. Earlier in the week, they released their interim results, which were relatively flat. And the last year hasn't been really great for them. But they have got a strategic shareholding now with Sanlam, who will obviously then try to cross-sell Afrocentric's medical aid product into their existing client database. And we believe that this relationship is strategic. So that cross-sell of the product into the Sanlam client base will make a big difference for a company like Afrocentric. But as I mentioned, it's not going to materialize quickly. So it's more of a long-term pick.
So it is not for impatient investors. Thank you so much for your time and for your analysis and giving us insights on what has been driving markets today. That was Simbongile Nyangintsimbi from Cartesian Capital.